Hey guys, welcome back, and we're looking at the Nifty 50 hourly chart. The Nifty has taken support around 17,080 right here at S1. Okay, and it's going kind of sideways. So let's quickly have define our support and resistance levels using Gann angles. I'm taking the first target for resistance at the price just above the high above the present price, which was previously support around 17,440, which is we'll call that R1. Our first support is just below our present support at, and we're calling that S1 at 850, 16,850, and the one below that at 600. Okay, calling that S2. So where these supports and resistances intersect, right? Those are they act as support and resistance levels depending on where your price is at the moment. For your convenience, I have labeled the support levels in green, as you can see here, and our resistance levels in red. Okay, as you can tell, our first support at 1710, followed by 950. Excuse me, followed by 980. Below that is 950. Then we have 900. So there is substantial support for Nifty below 17,900 between these two prices. All right. And the resistance is at 140, 17,140, followed by 240, 260. And since I ran out of space to put a couple of more labels, we have another resistance at 330. 330, followed by 440. Okay. So, how would you trade a market with so many close together supports and resistances? Right. One option strategy in a sideways market, since that's what the support and resistance levels are telling us, that Nifty could remain in the range of 400 to 900 for some time before breaking out above 400 or below 900. All right. So a few option strategies on a sideways market where our the VIX itself is falling. We are below 20% as I speak. So in a low volatility situation, how would you make money trading options? So the most trusted option strategy in a sideways market is an iron condor. Okay, an iron condor. You can look up what an iron condor is. I'm not going to go into much detail there. And a second one is a short straddle. Although the short straddle carries an unlimited risk, I would avoid that. I would go for a short strangle between 330. Okay, we sell a call at 330, and we sell a put at 900. Okay, that would create a short strangle. Okay, so these are some of the option strategies you could use in a sideways market. And let me quickly redefine the support and resistance levels. You might want to write this down. Supports at 17, nearly 17,010, followed by 980, 950, and 900. Okay, if 900 is broken, then obviously we are looking at around 850, 830, and 800 as your final supports. And for resistances, we are talking 70,140. We're currently trading above that. The next, followed by 17,240, 260. I doubt the 260 will be able to overcome today. Okay. And for tomorrow, our resistance could be around 330 and 440 in case the market goes up. Okay. Essentially filling up this gap right here. All right, guys. So if you have any questions, put them down in the comment section and I will get back to you. Good luck, and I hope your trades are profitable. See you in the next one. Bye.